Welcome to CRUX Investor. We caught up earlier today with David Stein, who is the CEO of Kuya Silver Corp. They're chasing silver in Peru. If you want our thoughts and opinions on the conversation, their strategy, and the company itself, you can find that at cruxinvestor.com/club, where you can also find detailed company reports. There are summaries of interviews that we have done just to save you a bit of time. There are training videos to help you with your diligence. There's commentary from market experts from around the world on a variety of companies and commodities. And of course, there's a thriving community of investors sharing their thoughts and ideas with each other in a nice, safe environment free from trolling and abuse. How nice is that? So that's cruxinvestor.com/club. We'd also like your feedback. So do give us a like, leave your thoughts below. If you want to see exactly what we talked about today, take a look in the description. David, how are you doing, sir?
I'm well, thanks. How are you?
I'm wonderful. Full lockdown mode, I'll have you know. What about you?
We're on lockdown as well. I'm just outside of Toronto in Canada. And it's I'm here in my home office, so ready to go online.
Come on, I was kind of hoping we get through this 2020 thing and then onto a sort of new beginning, but maybe we'll get there soon. Hey, well, Dave, thanks for joining us. New story. Well, your news story, not just us, but your news story full stop, because you guys kind of started up last year. So I'm really keen to hear what you're trying to do down in Peru. So why don't you kick off, give us a 1-minute overview of the business for people new to the story, like us, and I'll pick it up from there.
Sure. So Kuya is a silver-focused mining company. We're developing a mine in Peru. So we acquired the Bethania silver mine. It's a mine that has produced up until 2016, currently on care and maintenance, and undercapitalized private Peruvian mine. So our plan is to invest some capital, make it bigger and better, and put it back into production. We're on track to do that, in the next year or so. Okay,
fantastic. So. News story, silver. Were you just jumping on the bandwagon last year because silver was hot? Is that why you started it?
No, actually, I started the company in 2017, and in fact, the silver price, probably fell month over month for the first year or so of running the company, and really found this asset. And, felt like the grades were so high here that we could mine it at a low cost. And so the silver price down at, $15, $16 didn't concern me that much at the time. And we felt we could make good money doing that. And really, as someone who comes from an investing background myself, that's really always what I've been looking for is projects that can sort of pay their own way at lower prices. And then if we do get a bull run, which, obviously prices have increased a lot since then it's sort of gravy, it's a bonus for the shareholders.
Okay, right. So you started your company in 2017, but you've been through a process at the beginning of last year towards the middle of last year where you've picked up this Kuya asset. So we'll talk about the structure, the way that you did that and the financing around that, because you've still got some outstanding payments for that. But can you tell me about you? I'm interested in always kind of back the team out. So I need to understand what's your background. You give us some clues. You're in finance, but you also got a geological background too. So where have you come from? What have you done? And have you made shareholders money before?
Right. So I have a technical background, as you mentioned. So trained in university as a geologist. And then I basically jumped right into the capital markets very early on in my career, in my, early to mid 20s. And I worked actually as an equity analyst, covering mining companies for 9 years, and started off covering lots of junior companies. And I picked up the silver sector back in the mid 2000s. And then I eventually became a senior gold analyst covering, Barrick and Kinross and all these big companies. And then I basically went over and worked with a merchant bank on what I would consider more the buy side, doing investments. And it was quite an open structure. So we're doing royalties, we're doing loans, we're doing public equity, we're doing private equity. As the bear market in mining started to really set in I guess 2012, 2013, I started focusing more and more on private equity, as I felt like that was a better way at the time to sort of get good deals funded. And so I spent quite, a number of years sort of, I guess, learning and about private equity in the mining sector, which is still a very new thing. And then ultimately, went out on my own to start Kuya in 2017. So we, found this asset, arranged a deal to take to acquire it in sort of a staged manner, in an earn-in type joint venture structure, and then did that privately for almost 3 years, and then took the company public a few months ago.
Okay. Well, let's come on to that in a second. I want to stick with you. Okay. So
Yeah.
you did the kind of private equity component. So did I. So I think I know what you've been through there. But what did you do while you were there? What are the successes that people should know about, and what were you specifically focused on?
Well, it's kind of interesting, because I would say in the whole, sort of 20-ish years of my career, I probably spent 80+% of it on precious metals. But, during those years where I was doing private equity, was really looking at all commodities. And, the last several deals that we ended up, we were actually able to do with my predecessor, previous firm. One of them was actually a lithium deal. Lithium project that we acquired 100% of, and then we ended up bringing in another party to joint venture it with us, and then ended up selling it to them. So it actually was a huge win at the time. This would be back in 2015. The project was in Argentina. I liked the project. I had known about it for a long time. It's sort of been on my radar screen for a while, but I felt like in 2015 they were about to have a presidential election, and up until then, Kirchner was making it very difficult for people to invest in Argentina, and I felt like regardless of who won that election, it would be better for investors. And in the end, the better of the two candidates won, which was Macri, and so we had a number of years there where it was sort of all systems go on Argentina, and did very, very well on that investment. Another deal I did around the same time, again, private equity style, was a platinum project in South Africa. We ended up bringing in another European family office as a sort of essentially a 50-50 partner on that. That one didn't go as well, frankly, because the various parties involved, weren't willing to wait long enough. Of course, if it still had it now, it would be an amazing project. But in any case, had to sort of let that one go in the midst of a bear market.
Right. So yeah, timing's everything, right? Okay. So the skill sets that you're bringing to bear now are what? Deal construction, M&A, or is it the ability to run a mining company?
Well, I mean, I think I picked up all of those things, to be honest, in my career to date. And when you put together a deal, first and foremost, you have to be able to analyze the value and essentially figure out a fair price. That's not just the actual dollar values; it's also the structure of how you're going to pay for it. And so, for example, a deal that you pay for $10 million over 4 years might be better than a deal that you pay for $6 million all on day one. So the structure and the actual, the amounts all go into that analysis. And I think that's something that I've, developed a strength in over my career now. And then sitting on boards, basically being in the weeds with being an active investor in companies has, I think given me a lot of insight into what to do, what not to do when you're running companies. So I think that's really helped me. And then frankly, being the first guy in on Kuya, having my own money at risk has essentially been probably the best education of all over the last number of years. And so, what I didn't sort of pick up in the previous, 15 or 17 years of my career, I've picked up very quickly in the last 3 years.
Yeah, it's amazing what having your own money does to sharpen the mind and the focus.
Exactly.
But talk to me about the analyst years, because there you must have seen when you've done the junior market analysis, management teams at junior mining companies who just got it horribly wrong. You can learn from that. And people who've got it right. So what are the things that you have taken from your experience in terms of, I need to bring this to bear with Kuya, okay? I need to not make those mistakes. I need to structure it this way because the market reacts better, or I need to talk to the market this way because the market reacts better. What are the things, again? I'm just trying to understand, because to me you look quite young. You don't look old enough to be running a $100 million company. So what are you thinking about every day when you wake up about running this company?
Well, that's actually an excellent question. I did learn a lot in those formative years of being an analyst. And what's really cool about being an analyst is you get this exclusive access to talk to CEOs, and really, you really get a lot of their time that the average, person or investor wouldn't get. So you can develop those relationships, and you can learn a lot from that, both good and bad. I guess what I would see, I mean, it could be a very, very long conversation.
Good. I don't mind.
I covered probably 50 or 60 companies over those 9 years. But I have to say, I do look back on those years when I'm thinking about how I put Kuya together. Certainly some of the companies I covered back then are models for me now. I'll give you an example, like First Majestic is a company I believe I was the first guy to pick up coverage of back in 2005. At the time, they had a Mexican mine that was kind of undercapitalized, very similar to Bethania. And their plan was to put it into production, get a public market valuation, bring additional capital to it to expand, invest in exploration. And we're looking at doing the exact same thing. So it's that kind of business model. It's not your typical junior mining business model, which is basically drill, sell it to someone else. We actually want to build a mining company here. We feel we can do that. We've got a good asset that's, it's not like way too big that we can't handle it. And so we can actually be making money, making real cash flow in this in a relatively short time frame. And that's really the beauty of these high-grade silver deposits, which is the start of First Majestic, was the start of Fortuna Silver, was the start of Great Panther, and others, and Endeavor. They really started with one high-grade silver mine, be it in Mexico or Peru, even Pan American, which is before my time, but going back to the mid-90s, that's exactly how they started. And so we're just following that kind of a model. And I think we've got the first asset to do it.
Right. Okay. So I'd agree with you. Being an analyst, you do get access to a lot of people, a lot of data. Mm-hmm. You can look at things and go where it's gone right, where it's gone wrong. So I like that. But tell me, here's the bit I'm interested in. So, you worked in a private equity shop, which would have had multiple investments, across the board. Do you think situations like that allow you to be focused, or allow companies like that to be focused enough to be useful to an investment? Because again, we see situations where companies like that overstate their importance. They misread their value in terms of running a company like you're doing now. Now, do you feel that now you've got a much better, sharper focus on what you're trying to do than perhaps when you were working in private equity?
Yeah, I mean, one of the big differences to, when you transition to running a company is you need to become very, very focused on your, goals and your objectives of your company. And getting back to when I was an analyst, one thing that I did see that's probably, would be something that I would warn people against would be, worried too much about what the other companies are doing and this guy has this valuation, and it should be me, and whatever. What I'm really looking at doing is focusing on, we've got one flagship asset. We want to get it into production. We want to start making money, and then the growth will come through both expanding our flagship asset Bethania and other projects that we may look at already or in the future. But it's really important to keep that focus, because if we can do that, there's a huge additional value that we can generate here, and it's far more than flittering around and sort of getting distracted.
So tell me, and I don't mean to labor this point too much, but again, from your days in private equity, I think there are many situations where perhaps they do, I'm talking in dollar terms, intellectual terms, where they overvalue what they're bringing to the table, and I think that means that shareholders perhaps lose out, and I think that the company loses out because things don't happen the way that they should. I mean, what's your takeaway from your private equity days? I mean, and compared to what you're seeing now, having to run a company and be focused on a company entirely?
Well, I think the first thing you need to learn is to be humble, and and I think that's really that's for me, that's an innate, I guess, character trait, and maybe a reason why I'm not doing private equity at this point in time. So I know that for me, I put the company together, negotiated a deal in Peru, brought the money, the early money to the table. But then it was very important to sort of bring on a team to help me deliver this. And until we went public, we really focused on basically building the team in Peru. And I've got an excellent, lieutenant down there whose background is mining, engineering, or metallurgical engineering, I should say, but he's an engineer. And his name's Christian Aramayo. And so he really runs the Peruvian technical side of things down there. And with that team as a private company, we were able to, although we were somewhat capital constrained for those 3 years, we were able to accomplish some great things, including getting our EIA approved for the new plant and tailings that we're intending to build. So to be able to do that as a private company was really, a great accomplishment led by Christian down in Peru. And then as we've gone public now in the last few months, we're starting to build the corporate team here in Canada, and we've got some, brought on some excellent people for that as well. And I think that's really been key to the success.
Okay, so thanks for explaining, your background, your ability, your experience there. Can we talk about the asset now? Because I'm keen to understand what it is that you've got there. And I see what you plan to do with it, but more importantly, how you structured it. So you don't mind kind of giving a little a review of that?
Sure. So it's a high grade silver mine that was in production up until 2016. It's your in some ways very typical Latin American undercapitalized mine run privately. They actually made money when metal prices were high, or started losing money as metal prices fell a number of years ago. And when when I first looked at this project in 2017, it was kind of a distressed or turnaround kind of situation where it needed some money immediately, needed some money longer term to make it better. But really a great potential there. The secret sauce to this project is the high grades, and it's very high silver grades plus other metals as well. So we get a high dollar per ton, but also but it is predominantly silver. Sort of 60 to 65% by revenue, depending on the metal prices, of course, of the day. And but we do have lead, zinc, copper, and gold as byproducts in this project. And because the grades are so high, with relatively small tonnage, you can make a meaningful production, whether you look at it in terms of silver production, millions of ounces, or whether you look at it as dollars of cash flow. So we looked at it and thought, okay, well, the capital that needs to be invested here, though, critically is going to be to build our own plant. So they had never been able to do that as a private entity, so what that meant is that they had to toll mill their ore. So the entire history of this mine they've been toll milling at various other lead zinc mines in the area, which are pretty common in central Peru. But you always get, that cuts into your margin quite heavily, whether it's the trucking cost to get it there, or whether it's the toll milling fees or the loss of recovery when you're using someone else's plant. You sort of lose at least 3 different ways there, and you can solve those problems by having your own plant. So we're doing that right now. We started permitting it back a couple of years ago, and so that's when I mentioned we have the EIA, which is by far the most important and the most difficult permit to get. We got that last August, and so now we're well on the way to that sort of construction, period where we can start investing in the shovels in the ground and get this thing up and running by 2022.
Right. So you raised what, $13 million back in, when was that? October-ish?
Correct. We closed it in July.
Right. Okay. So use of proceeds. I mean, how does that money get applied this year? Are you going to need to go back to market? Because you're talking the language of getting into production. We're going to get into production. We've done. Yeah. We're having that discussion rather than drill results. Those headline grabbing high grade numbers that the market least likes to see occasionally. So you're very clear. You're a development company that's moving into production. That's what you want to be seen as. Right. Can you do that for $13 million?
Right. So the $13 million that we raised was largely to close that acquisition of the mine. So when we had gone public back in October, we still essentially owed quite a bit, $4 million US for the mine. And so, a good chunk of that money that we raised went to pay off the remaining essentially money to acquire the mine. So we did that. That closed in December. Then with the rest of the money, or meanwhile, what we're doing is we're doing a drill program, which to sort of give us greater confidence on the existing non 43-101 resource, the resource that we inherited at the mine from the private mining company. We want to do some work on that. So there's probably $1 million and a half that's going to go into that. We're finishing the detailed engineering as well. We've hired Mining Plus to do the underground design part of that detailed engineering, as well as to put together a PEA for us. So that will, allow us to essentially do, better communicate with the market once we complete that. And so all of those things are really, it's all the pre-construction stuff that gets covered under that 13 million, I guess. And then we will, the capex that we've been estimating is around 10 million US. So it's not really, what I consider material. I mean, obviously it's still $10 million, but, it's not something that I feel like we'll have trouble raising when we decide to do that. So I think, that's something that we will tackle at some point in 2021. And, obviously, we don't want to wait too long, because we do want to get the shovels in the ground and get this thing built by the end of the year.
So how much money have you raised prior to that 13 million in total?
We raised about $4 US as a private company. And the 13 million was Canadian. So, put it in Canadian terms, I guess we raised about 18-ish. Yeah. 18, 19 up until today. Yeah.
100 million market cap, not too shabby. This is probably the best way of doing it, isn't it?
Well, it's worked out. I mean, so far, but we have a long way to go with building the mine. And I think if you look at some of the silver miners that are public companies, their valuations are way higher than ours. So that's who we're aspiring to be, with building the Nathaniel mine, getting the profitable production from that next year. I think if we can do that, then there's still huge gains to be had.
Right. Okay. So you've hired Mining Plus to do the PEA. and you're going to have to do some drilling alongside of that to like understand the numbers properly. And by that you mean what? Some infill drilling? I mean, what are you after? What are you looking to reaffirm?
Yeah, I guess I would call the majority of what we're going to do infill drilling. We have this database that we inherited from the underground production that is quite good. It's thousands of samples taken underground in all the various veins that have been mined, and all of which still have ore, or maybe I'm not allowed to say ore, but all of which still have mineralization there. So it's something that that as an investor myself, and someone with the technical background, I was very comfortable in investing in this project, knowing that we had all that data from underground available to us to figure out where the veins existed and where they were going. The drilling's going to add to that. It's going to give us more confidence. And at the same time, what we'll do is we will do a 43-101 report resource estimation. That's not Mining Plus's mandate. That will be someone else's. And then Mining Plus will use that information and put it all together in the mine plan and the PEA.
Right. Okay. So what do you think? What do you know versus what you think you've actually got there? Because you're going to go and raise $10 million. You're probably right. In this environment, it shouldn't be too hard a conversation to have. But you've got to talk to them about what it is that you've got and what you're going to be doing. So can you just sort of lay out what the next couple of years looks like in your head?
Sure. So, I mean, first of all, in terms of what we have, the asset, what we know about it, if we did a 43-101 technical report last year, so before we went public, and that is available for anyone to read who's interested. And in that, you'll see the historical resource that is not 43-101 compliant, but it is 8.3 million ounces. Some of which they considered reserves because the previous owners considered reserves because they had done development essentially on all sides of a stope, ready essentially to mine it. And at our 350 ton per day rate that we've permitted, that would give us about a 4-year mine life, producing about 2 million ounces a year at the expected head grades.
Right. Okay.
None of that, of course, that's all management estimates, of course. None of that is in any 43-101 as of yet, but that will all come in the coming months as we do this resource estimate, as we do the PEA. Then we'll be able to better talk about the production potential of Bethania. And so that will really be the phase one. And that's the plant and that we want to build. That's the production profile we expect to have when we go into production. And then from there, the more sort of optimistic or the upside scenario for us then will be to keep drilling, make our resource at Bethania even bigger. And there is absolutely, huge potential for that. There just needs to be some methodical drilling done to extend the veins at depth and along strike. So it's kind of, we know where to go. It's just a matter of doing it. And when we do that, then we can start thinking about expanding the plant again and making the production profile bigger, sort of a phase two. And that's something that we definitely have in our sights for Bethania in the next few years.
Okay, so help me understand the model, because if you're an ex-analyst, I'm an ex-analyst. If someone came and talked to me about a 4-year life of mine, I'm like, oh. Do I carry on this conversation? Yeah. So what is it? What is your business strategy? What's the plan here? Is it just get going, get some cash flowing, and that'll fund phase two? Or is there some other way that you're approaching this?
So, I mean, first of all, I should say that, as someone who has a geological and technical background for myself, I don't live and breathe what's in a 43-101. And I realize that as if you're a layperson and you need, you're not an expert in the field, you rely heavily on those. But when I look at this, I look at a project that, yes, has a 4-year mine life right now, but it's very easy, in my opinion, to make it much bigger, to make it 10 or 12 years just by drilling along strike and at depth. It's very different than saying, I have a 4-year mine life. I have no idea where the ore is after that. Well, that's not the case at Bethania. We know where the ore is after that. Again, it needs to be drilled out. So that to me, gives me a lot of confidence that we're going to be there in this mine for a very, very long time. The question is, are we going to expand production or not? That's really the question. Or do we just run it, at 2 million ounces a year for the next 10 or 12 years, maybe longer. So that's sort of what we have there. And that's the business model, for the first phase. My feeling is that we are going to end up expanding it, not only because we've got a lot of potential at the Bethania site itself, where the mine is located, but also the region is very interesting. And we have other bigger property land packages in the area nearby the mine. So the opportunity to find satellite deposits as well is I think, quite high. Now, that's something we'll be doing in the longer term, but we expect to be there in the longer term. So one or more satellite deposits could bump up our tonnage, and then we might justify an expansion that way as well as just making Bethania the current deposit bigger. So there's sort of a number of ways that we can grow this, which to me, as an analyst, that's good. That gives us multiple avenues to increase value and to make this project bigger and better than it is right now.
Okay, I mean, you asked my second question for me, which was the throughput of 750 ton a day. Again, is kind of at the lower end of where you'd want to be, but it's fine in the sense that it's small but perfectly formed. But it informs us as to how you're going about doing this. So, and I do buy your argument that you will do infill drilling and you will expand resource at long strike at depth. Who knows? You've got to do that through the drill bit. But for investors, you're saying, well, this is going to be the least dilutive way of us developing this into something bigger, which is great. But at the same time, that's going to take time because you're going to have to reinvest your dollars back in the ground. So it's a kind of catch-22, isn't it?
I mean, at the end of the day, I think you have to look at what the deposit is giving you as well. It's not just purely a capital decision. In our case, we have this, relatively easy or simple geological model here with these veins. They're all kind of subparallel to one another, which means they're going in the same direction. They're all kind of in a swarm relatively close together, so you can access multiple veins from the same tunnels underground. So we've got a lot of things going for us, which, to me, I really see the opportunity to get into production quicker, which you're right. That means we're making money. That means we can reinvest that cash flow in exploration, and it is less dilutive for us in the longer run. So it's both, I think, a factor of what our business model is, sort of following that, First Majestic kind of business model, or Pan American in the early days business model of starting with small production and then using your sort of your capital to grow, acquire other assets in the longer term, et cetera, and sort of build into a multi-mine company that way. I think that's all stuff that we can do, and we're in a much better position, a much stronger position to do that if we're already making money versus at the whims of the markets on any given day to raise more capital. Okay,
Peru, are you going to be okay doing business this year? I mean, how are things in South America with regards to COVID restrictions and the ability to plan out your mining?
Well, I mean, one thing that we've seen in Peru is when they did a very strict lockdown back in March, actually, when COVID sort of hit us all in the world more or less at the same time. And then they lifted the restrictions in particular for the mining industry quite soon after that. They really realized that, we need the mining industry going. It's a huge generator of taxes, of employment, of, all sorts of other benefits. And it's the biggest industry in Peru. So they were, they sort of bent over backwards, I would say, to get the mining industry back going, despite the issues of COVID. And I think the way they did it was pretty smart. They sort of let the big companies, the giant companies like the Rio Tintos and the Glencores and stuff sort of pave the way for everyone else and let them open first. But now everybody's open. So So, I think, hey, like everywhere else, there's going to be new health and safety protocols, and there are new health and safety protocols we need to follow in Peru, and we're on top of that. So as we start to reactivate the site right now, which we're doing in January here for drilling, we have to follow those protocols. We have to prove, to the government that we're doing the right things, and that is all happening. But my feeling is it's not going to really prevent us from doing anything this year. Yes, we do have to change the way we're building our camp, for example, but it's not really going to slow us down in any way, unless there's a big outbreak again or something like that, which I guess none of us can really predict. But, the good thing right now is Peru's actually, most of Peru's in their summer period, and that seasonal effect of COVID does seem to play a big role there. So just like we in the Northern Hemisphere saw our numbers drop over the summer period, they're seeing that now in Peru right now. So their COVID, which was one of the worst in the world a few months ago, is now drastically improved. And then hopefully that combination of the natural improvement that they're seeing in Peru with the vaccine hopefully means that they won't get caught again in the next winter with rising cases.
Okay.
And increased restrictions for us, I guess, is the important.
There you go. Yeah. I mean, you've kind of detailed, how you've gone about structuring this deal in terms of, with Merrimack Resources and Kuya, Silver Corporation, etc. So I think that's kind of well understood. And I think it's a good deal. You've picked up a good asset very inexpensively. So I think that's good news. Can you talk to me about how you manage your costs going forward? Because another part of the loan, when we're talking about lessons from previous experiences, how do you keep your costs low at this point? I mean, how do you manage your G&A? How do you remunerate yourself?
Well, I think that, being a big investor in the company myself plays a big impact to how I look at, G&A. I think we've been very, very frugal as a company up until now. To some degree, we're forced into frugality with COVID-19. You can't do a lot of things that cost a lot of G&A money right now that other companies would probably normally be doing, or a lot of public companies would be doing. It's definitely more expensive to be public, though. There's no way around that. But we felt that was a cost worth taking, and I think it has been. But we're just trying to manage that the best that we can. We do need to ultimately hire some more people. We've sort of come into this with a very lean management team. Only a few key people down in Peru, a few key people in Canada. So we will grow it, but I guess at the end of the day, being an investor myself and understanding how hard it has been to raise every dollar up until this point, I'm not going to take that for granted when we do make those hiring decisions, when we do make the decisions about I guess other overheads that we may or may not need to take in the future. So, I mean, we're in a great position right now, and I don't kind of see us spoiling that by getting all sort of crazy with a lot of expenses going forward.
Okay, so how many shares do you have, and what percentage of the company do you own?
So I own about 25%.
Wow.
Yeah,
that's very good. And are you paying yourself well though?
So I'm on 235 Canadian a year. And then everyone else would be, I guess lower than that, depending on their position. Okay,
fine. Okay, so 2021, what are we going to hear? If I speak to you this time next year or the end of 21, what will you have achieved?
Well, I mean, hopefully we've achieved a lot, because we have and we've got very ambitious plans for 2021. First thing is going to be the drill program and the resource estimate 43101. At this, the same time, we want to finish permitting. finish our project financing for the plant and tailings or the expansion project, whatever form that may take, and then get that essentially constructed over the second half, or maybe the final 9 months of the year. I think there'll be something going on in terms of building that. It's a quick build because it is a relatively small project. Frankly, we are able to build it really quickly, but I expect the bulk of that action will be happening in the middle to later in 2022, 2021, and then at the same time we have sort of picked up a secondary project for us. I don't expect it to be a big focus, but we're in the process of making an acquisition in Canada with a silver dominated project in Ontario. It's basically the historical Cobalt area, Cobalt, Ontario, which was a historical silver producer from the early 1900s all the way up to the 80s, and then basically been left more or less untouched since then. So we have some ideas to go back there, and we think there's potential for a kind of a Bethania style, believe it or not, small high grade mine, and that we can start small, produce a few million ounces of silver there per year, and then grow just like we're looking to do in Peru. Basically, repeat that model in Canada. So we've got an earlier stage project there. So we'll make some headway there as well. That would be another goal for 2021, to build out a resource by the end of the year, somewhere on that property. And so I think that's going to keep us very busy.
That's fantastic. Okay, maybe we should talk about that again. I hope we don't wait till the end of this year to talk about it, because that's interesting, because I think M&A seems to be happening a lot. There's a lot of big M&A happening, but at the smaller end too, I guess there's some deals to be had. And if you're picking it up at the kind of prices that you've managed to pick this up at, that'd be a great day at the office. Well, look, David, thanks very much. Lovely run through. Nice to meet you, first of all. Thank you. And also, I do appreciate you running through this news story. I know you're starting to get it out there now. What's your take on the silver market at the moment? Is it going to sustain for 21?
I think it has a lot to do with what actually happens in the U.S. in the next few days. I think the bullishness that we've seen with the gold and silver price is a lot to do with the expectation for an increased stimulus, and essentially the money printing presses in the U.S. continuing to go hard, so I think we'll have to see what happens there. I think in the longer run it's one of these things that's inevitable, but in the shorter run, if there could be we might have gold and silver check back, I guess, if the wrong things happen over the next couple of days in the US. I think that's still what happens in the US is still very, very important to the precious metals markets, because we do sort of price these metals in US dollar terms. So that's my take on it. I'm longer term bullish. And by the way, I really, when I look at the silver price, I really look at gold, and I see them just, moving more or less together. I don't see a tremendous difference. I don't expect one to go in a different direction than the other. If gold goes up, silver will go up more because it's a smaller market. It's the higher beta play on basically the same fundamental principles, and the reverse obviously on the downside. So I'm hopeful that we've got $30 silver in the next in 2021. I definitely see that could happen, but I wouldn't be surprised if it's maybe a few dollars lower as well. It's not going to dramatically affect our business plan at Kuya, but obviously there's that potential there, and we'll benefit if prices go up for sure.
Yeah, I think interesting times. I'm a little bit more bullish on whatever happens the next few days in Georgia and elsewhere, and on the 20th. I think most people listening to my shows will be surprised to hear me say that, but I think gold and silver will continue to rise. I think it'll be less meteoric, but it will continue to steadily grow for sure. Well, David, I appreciate your time today. I know you've got places to be. Thank you again for coming on the show, and we hope to speak to you soon.
Okay, sounds great. Thanks for doing this.